Hello and welcome to the Amati Insights call. As usual, before we start, please do take a look at the disclaimer, which should be on the screen now. It's also available on our website. And particularly take note that none of today's comments should constitute investment advice. We'll be talking about some individual stocks today, but it's really important to do your own research as everyone's circumstances are different. And if necessary, do seek professional guidance. But with that said, on to today's subject, which is the memory supercycle. And we had a memory supercycle call back in May last year, and we've held positions on the fund in memory for, in fact, since we launched the fund. SK Hynix has been on the fund since launch. And our argument for some time in this area has been that AI will really accelerate the demand for memory, certainly in the data center, but also on lots of devices. And we've viewed it as being quite an asymmetric outcome. So in other words, even if AI doesn't progress much further than it currently has, there's still going to be a huge increase in the demand for memory across lots of different applications. So there's a very wide field of demand, but it's being supplied by a very consolidated, disciplined industry, and there's limited capacity. And as we've seen in the past in these situations, that tends to lead to pricing and profitability improvement for the companies involved. And it's worked really well, to be fair. So since May, Samsung Electronics has more than doubled. SK Hynix, I think, has more than tripled in that period, and both have outperformed the kind of AI bellwether NVIDIA, which is up about just over 30%, I think. So it's been a very strong period of performance for the fund. And the question is, that's all great, but what happens next? And Mikhail, you've obviously been the principal brains behind this trade for the fund. So how do you view things from here in memory?
Well, important thing is to, no pun intended, to remember what happened before, not carried away. This is a hugely cyclical industry, both in terms of supply-demand cyclicality, but also in terms of share price volatility. I like to use Micron, which is, as you may remember from our prior conversations, is really a three-horse race in DRAM. It's Samsung Electronics, SK Hynix, and Micron, which is the only American stock in this list. It tends to be a bit more volatile as well. The movements tend to be a bit more exaggerated. But just this reminds us of the boom in memory in 2016, 2018, when it was a cloud boom. AI was mentioned briefly, but at the time already. But it was, this arms race between Amazon Web Services and Microsoft Azure and Google Cloud Platform, building these clouds as fast as they could, and really buying memory indiscriminately. The price wasn't an issue. They just needed to have the chips to build their data centers. During that period of time, Micron was up fivefold from trough to peak, and then halved in the late 2018 as the boom normalized. The next cycle came during COVID. We all sat at home. We all needed a lot more capacity to work from home in our enterprise networks and our data centers, but we also all bought new iPhones and new computers and new gadgets, which again stimulated the demand. And we've seen, for example, Micron tripling over the period of time, and again halving in 2022. This cycle is even more pronounced. Micron is up sevenfold bottom to top, and almost parabolically accelerating in the past year. So, some optimistic commentators use this dreadful phrase, "This time is different."
Yeah, I've heard that. But I mean, yeah, so that is the question, I guess, though. Do you think it is different this time?
It's a bit different. I mean, the market is very buoyant. If you look at the underlying price of memory, it's spot price. Not many significant buyers buy memory at spot price as a contract market, but there is a spot market. And memory, if you own some 16 gigabyte DRAM chips in September, they are 7 times more expensive today than they were in September. This physical commodity, if you like, forget gold, DRAM chips was the physical commodity to own. And that's conventional memory. It's not even AI high bandwidth memory. So there's a real capacity squeeze across the board. And contract prices are going up. They're going up between 40 to 60% for DRAM and NAND. So it's really, really a significant increase in pricing. And it's a fantastic accelerant for the profitability of these companies, because all this price increase falls to the bottom line. The bit growth, the supply growth over the next couple of years is probably going to be about 20% per year. So it's not enough to satisfy demand growth. DRAM makers were sold out for the whole of 2026, but now people are talking about shortages extending into second half of 27 and maybe in 2028. We're even hearing conversations again. Remember the car production disruptions because there weren't enough semiconductors to go around in 2021, 22. Well, guess what? Cars have DRAM too. And so there are already conversations, will there be car production disruptions because of memory? So this squeeze feels different than it was last time, but it still remains a cycle.
Yeah, I mean, it's certainly fair to say it's right across the board. I mean, we're hearing everything, DRAM for operating memory to NAND for longer term storage. You know, the demand is really everywhere. DRAM content in phones is just exploding. TSMC, Taiwan Semiconductor, I think recently expanding their WMCM, which is their clever multi-level wafer packaging to get more processing and more memory on the chip. They're expanding that because Apple needs it. Apple needs more memory on their phones, and for AI. And it's not just phones, obviously. HBM, high bandwidth memory for AI, AI training, and DRAM in networks. Everything's seeing solid demand. So it really is across the whole memory complex. But I guess what upsets that bull market? You know, what causes it to slow down?
Yeah, I mean, people worried for a while now about Chinese suppliers, but I think if anything, that risk is becoming less. The China memory industry had become credible over the past sort of 5, 6, 7 years. Two players, CXMT and DRAM and YMTC and NAND, are credible suppliers, but there's just not enough of them to make a difference. China's probably about 10% of global supply, and they can't sell too widely. You know, if you're Apple, you probably don't want to be dependent on Chinese vendors for your memory chips for obvious geopolitical reasons. They're also technologically behind on DRAM, and they're probably going to fall further behind because you need EUV, this kind of very high performance manufacturing technique that ASML supplies, you know, those EUV machines, and ASML can't supply into China. And the latest memory chips need EUV to do their work. In NAND, in flash memory, Chinese vendors are more competitive, but you know, only 10% of total, and you know, the lead times are long, so it's not very easy to ramp up capacity. And that goes for the other concern, the uncontrolled expansion. You know, this isn't the first cycle for these companies. You know, they've been here before. They've been very disciplined. They've been very disciplined through the down cycle. They cut capacity during the down cycle, and they moderate their capacity expansion in the up cycle. So they keep, you know, nobody wants to use the word oligopoly, but you know, they keep the oligopoly working and disciplined, and through the cycle very profitable. So I think that's not a concern. A very big risk, in my opinion, is just the AI demand risk. You know, that one that applies to NVIDIA. You know, it's a phenomenally buoyant capex boom. You know, one of the people compare it to the U.S. railways or you know other episodes of huge capacity expansion, telecom boom during the late 90s. We're yet to see it pay off in a big way economically. So 2 years ago, we could sit here in front of you and say, hey, nobody thinks memory is a beneficiary of AI boom. We do, and it's a really asymmetric bet. Now, at least for SK Hynix and Micron, they're definitely in those AI baskets. Samsung Electronics less so. They weren't really participating in the first round of HBM, this kind of AI-specific memory. They didn't get NVIDIA business. They although did supply, specialist chips at Google, for example. But now they are in the frame as well. So they're making progress. So if AI capex dramatically moderates, memory will not be immune from that.
No, that's true. And I guess you're right that demand is certainly a risk. I mean, as we've seen in the past in cycles, the best cure for high prices is high prices. And that is an issue we haven't really seen fully play through yet. So I guess watch this space. But we saw Apple for the iPhone 17, they pre-bought a lot of their memory. So that we haven't seen that impact yet on smartphone pricing. Dell has been recently warning about price increases for PCs, and some smaller companies the same. You know, just finding it difficult to get memory, at prices they can afford. And either that leads to customers trading down to lower memory modules, or prices will have to go up. And we know that there is this insatiable demand for AI, particularly AI on devices. A lot of memory hungry applications that consumers want will require that extra memory. So, but when we've seen this in the past, if this does lead to increased prices, the natural reaction is that the industry does build new capacity, and you're saying that's not yet happening so much.
Well, it is starting to happen. So up until recently, there were some conversions, and we've seen a couple of pull-ins recently. So the plans that were already on the drawing board are being a bit accelerated a bit. But now industry is actually needing to build new buildings and new lines, and they are making those plans. So we've seen memory capex intentions at the last set of announcements. Now forecasting between 10 and 20% increase year on year, which is a healthy growth, and that we think that'll accelerate further. So we're definitely going to see that, and it's starting to impact the share prices. The semicap or semiconductor equipment manufacturers like Lam Research, which is that one is particularly exposed to memory, had seen their share price performance accelerate.
Yeah, I mean, we probably should spend a bit more time on the stocks, because in a couple of minutes we have left. So any implications on stocks you want to bring up?
Yeah, memory remains a significant proportion of our fund. It's about 5% in total, so it's a material position. The best metric that people look at in understanding whether memory stocks are overvalued is price to book. It kind of corrects for this through the cycle earnings volatility that can go from almost break even to extremely profitable. And historically, that ranged between 1x book and 2x book. That was a good mnemonic for a memory investor. And in late 2022, when we were buying the stocks, it was hovering about 1. So effectively, we were buying this brilliant company supplying this mission critical product at replacement value, and sometimes below replacement value. It was an amazing value. Now it's very elevated. So Hynix and Micron, which are very clearly understood beneficiaries of AI memory boom, are 5x book, so way out of their historic range. And Samsung is at 2x, so not fully priced for this boom yet, like the other two, but also somewhat elevated. When you look at PEs, though, price earnings ratios, it's a very different picture. So it's about 7x to 9x earnings. So it's actually, it looks very cheap if you think about earnings. It looks very expensive if you think about assets. So if you think this earnings, this super profitability period is going to extend for many years, the sector is good value. If you think it's still a cycle, you should be heading for the exits. We're somewhere in the middle. We've been taking profits on Hynix, and we remain invested in Samsung for now as it catches up with the rest of the group. And we are very much invested in semiconductor equipment, not on Lam Research. We are not chasing that, but we own one of their key suppliers, MKS Instruments. Some of the subsystems that do the magic in those machines that make semiconductors are manufactured by MKS, which is a relatively little-known company, but a really good business with a very recurring revenue stream, a rarity in semiconductor world.
Great. I think we're unfortunately out of time, but thank you for that. That's a good run through. And obviously, if people have questions or want to follow up on any of this, please do send us an email. You'll find contact details on the website. But until next time, then we'll say goodbye for now. Thank you.
Thank you very much.